Morning. I'm Grady. I'm on the charts. Thank goodness it's Friday. Let's go ahead and finish this week out nice and strong. We had a rough start to it, but we got things together. One of the things that we kind of struggled with was kind of getting the stream up and running, but we are doing it. I'm Grady. I'm on the charts. Thank goodness it's Friday. All right, well, at least we know the mic is working. So, what do we have going on here? The market has just opened. And what I believe that we're going to see today is a continuation of some of the price action that we've had going on this week. We've had so much news, so much activity, so much volatility. We've broken so many records financially, percentage wise, that it's completely unreal. But what we're going to want to focus on today is we want to focus on read the retracement that we've had back to certain levels that we established yesterday. It doesn't, it seems a little bit odd, but this green level here is yesterday's first presentation fair value gap. We traded to that level in the pre-market. In the beginning of London session, we were at yesterday's first presentation fair value gap. Then we broke down and we consolidated in the premium of London session for a little bit. Then we've moved down into its discount. Now, this highlighted area here and this level are the two levels that we were using yesterday. We had a 1 minute imbalance that we were watching as price dropped into it to see whether it rejected and sent us higher, right? It did not send price higher. Okay, so what it did is it put us back to that first presentation fair value gap. We consolidated through it again, we repriced it, and then we delivered to the downside. That's where we took our entry yesterday. So then the PM session, we retraded back to that level, broke down again. Then we traded through the Asian session and then the London session. And that brings us right to where we are right now. So yesterday we had an example of this, where just as the market opened, we traded just inside of the pre-market imbalance and then we moved lower. Now, I don't normally like to take trades straight off the open. I like to let price kind of do its thing. But it seems as if we are already in the process here on this 5 minute candle. We're already beginning to deliver to the downside. That's what it looks like. Now, we are exactly where we left off yesterday. When I closed the stream off yesterday, we were right at the relative equal highs. And 18 hours later, 20 hours later, we're right back to that point. Excuse me. So I would be looking for the first presentation fair value gap as an area to enter. This gap at the pre-market, as we traded right into it, we took out that previous high, then we just slid right to the downside. I am on micros, so feel a little bit more adventurous as far as just getting into a trade early on. But I don't want to do that because I don't want to go into the weekend. I don't want to go into the weekend with this crappy feeling because I started off. I had a good trading day yesterday. Then I come in on Friday, and then the first thing I want to do is I just want to start popping them out, popping them out, popping them out, popping. I don't want to do that. I want to take my time with it, right? Small imbalances here. As price begins to slide. And I really do believe maybe this is our only opportunity. I have that sensation that we've repriced this area enough through Asian session and the London session that if we came into this zone again, there's not much by the way of resistance that would hold us in this area. So that's the first thing I'm watching for. Yesterday we encountered Wix's gaps multiple times. That was very interesting. We're coming to the end of the first 5 minute candle. There are a lot of things that we endure as traders, and one of those things is that acknowledgement when we um, have an opinion and that opinion isn't correct. So I stated my opinion, and now I am going to watch to see what actually happens because I'd rather be profitable than right. We've all heard the saying. I would rather look at the market. 41 seconds left in this 5 minute candle. I would rather look at the market, say, "Oh, I have an opinion," and then look at the candles and trade the candles. We have moved down below a lot of these levels. That move back into this small little zone right here. Man, I just, mm, there we go. Show me something different. Show me something different. Show me what I'm missing here. There we go. Show me something different. Okay, I don't wanna take a good trade and then let my ego get so involved with yesterday's price action and yesterday's trade that I don't get I don't even get a chance to trade today's trade, right? I'm so busy living off of the living in the past that I would not have an opportunity to trade today's trade. Here is the 5 minute closing price of that previous candle. Boom, we just ran it one time. The ended of this 5 minute candle, we just ran up to the wick of this candle. 24 seconds left. Here's the wick of the 1 minute. Now the 15 minute candle open here. 9 minutes, and we just took we see that was a small imbalance on the 15 between this wick and that wick. We just ran inside that gap right there. This 15 minute candle is very interesting. It has a lot of potential to. We just tap that 15 minute close one more time. There's consequent encroachment of that small imbalance of the pre-market. Hmm? Now we were able to run the relative equal lows yesterday, and we got down a considerable um, amount of range into those wicks below the highs. My concern yesterday was that we would run down and hit the bodies of these candles and then reject and immediately go and move higher. But we didn't. I think when I got out yesterday, I left about 1,900 ticks on the table, which is okay. Um, we've rolled over just a little bit right here. There's 2 minutes and 47 seconds left in this candle. I like these entries as a stronger possibility for a place to get in. I don't think we're going to get anything else back in this area. Everything else up here is very, very good. Now I have the 5 minute candle stretched out so they look a little bit um, exaggerated as far as the distance of those wicks. How long are these wicks to see how much risk we would be dealing with? They are nice and healthy, nice and healthy. So I'm looking for something up here. Let's see. There are 2 minutes left in this 5 minute candle. That does look like a swing high into this imbalance. Hmm. I don't necessarily see. Um, I want to say I don't necessarily see a first presentation gap form anywhere here. I think earlier this week there were several that did form, but they were much later in the day. I want to say 15, 30 minutes into the 15 to 30 minutes into the development of the price section for the day. Let's see. Oh, 100. Oh, okay. So here's a nice little push up right here into this gap. There are 45 seconds left in this 5 minute candle. I just sold this and I bought this. Excuse me. It's it's too, and I took that trade too early, and I knew it was too early. And I thought that a second ago. I was like, I said to myself, and I didn't say it out loud. And that's the unfortunate part of me streaming is that I should be waiting on time. I should be waiting on time. So that 5 minute candle was about to end, and my anticipation was that we were going to run higher. We were going to hit this level. We're going to come up here, and then as the candle was closing, as the 5 minute candle was closing, we would begin to descend back into this range, putting a very long wick on the candle, and then coming back in. So that on the 5 minute chart, we would see this imbalance, but then we would see the 5 minute candle close down here. That was the trade that I was looking for. However, we still have 4 minutes and 27 seconds left on the 15 minute chart. Mm. Okay, now we drop down into this gap right here. See, this gap just formed right here, and we dropped right into it. Now we have 3 minutes and 58 seconds left on the 15 minute candle. We dropped inside of it. We hit the low. We turned over and we popped up. My entry was here and my stop loss was here, and I was just run out by that much. Mm-mm-mm. Okay, 3 minutes and 28 seconds left. And still too early to it's still too early to really just become completely overwhelmed by, what we see in price action. It's just the day has just started. We've only been here about 10 minutes. We have one 15-minute candle on the screen. That's it. And it's about to close now. I attempted to make this entry just a little bit too early. Stop loss is a little too tight because we finished below this small gap right here. This is the pre-market imbalance. And I'll bring the pre-market imbalance out of the way. This is the close of the prior 15-minute candle. And I'm looking at this little idea right here. hmm Very good. 2 minutes left in the 15 minute. This is again exactly where I just entered. Let's see if it goes much, much higher from here. Not just higher, but much, much higher. This would be interesting to see. I think I've kind of zoned in and zeroed in on price action a little bit too tightly. I've zoned in a little bit too tightly. I don't have any higher time frame levels that I'm watching right now. And I think that's going to cause me a problem in just a second because I need at least an hourly chart. I need to see where we are on the hour to give us some indication of where we might be when we get there. And so let's grab an hour. Let's take an hour right here. Okay. And then we'll take one little level here at this close of this up close candle, which is the hourly close. I'll highlight that level. This is that pre-market zone from yesterday that we've utilized multiple times. I want to pull that back just a little bit, and then I want to reduce the size of the lines around that because I don't want to have so much prominence. We've just traded right back to the consequent encroachment of this gap. And perhaps that's what I need to see the hour close. If the hour closes here below the consequent encroachment of this imbalance, perhaps that's what I'm really looking for, right? All right, so on the high of this hour, this is what I would like to see. What are we pointing to when we look back this direction, right? What are we moving through? Are there any bullish or bearish indicators that we're signaling to? What kind of liquidity did we take out here, right? What kind of liquidity did we take out? Well, notice that once we ran above this level, we took out all the liquidity above this, and then we dropped right back into the zone. However, now we have sell side all through here. We have a little bit of buy side here, some there. Okay, okay, okay. There is an hourly imbalance here. We traded to the consequent encroachment of that level here, right back to the discount of it we displaced. We had these overlapping gaps, but we priced that yesterday. There are 14 minutes left in the hourly candle. All right, there are 14 minutes left in the hourly candle. Let's see what happens. There's a lot to measure here, and there's a lot to monitor, but I think that that's a little bit better than what I was looking at just a second ago. Because what I was looking at just a second ago was simply, um, like the tip of my nose, right? I wasn't looking down the road. I'm looking at the tip of my nose, and I wanted to make some long-term decisions based on what I can see that's right off the next minute, the next 5 minutes, the next 15 minutes. Yep. So take a quick step back. There is a 2-hour high is coming up shortly. We are approaching it now. It's also the 1 hour high, so it's same level, which is excuse me, right here. What is this? 18, 639.75. Oh, 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 oh. Mhm. Okay. Okay, we came to close proximity to it. Didn't really touch it. It's 9:46 a.m. hmm Small imbalance right here. Can pull that forward. In 5 minutes of lower imbalance. We are very, very close proximity to the upper end of this candle, and that's enough. It doesn't need to be more than that. We don't have to run it. We don't have to touch it. We just need to get into close proximity to this candle. This candle's up close. Once we move above it, then we would start considering whether or not that would be a bearish signal, or whether or not we're just taking price up there to price inside of the wicks of these upper closed candles, right? We're just retracement into the premium of the London session. Mm. 5 second candle just kind of dropped back to the low of that imbalance. It consolidated a little bit right along consequent encroachment, then it dropped down. Now that we've closed, we put a wick up to the underside of that the previous down close candle, then we dropped a little bit. Let's see how we act inside of this small imbalance right here. What are we going to do right in here? We're going to move to the underside of that up close candle, and then pushed, we pushed, we we did what? We pushed, we were sitting at consequent encroachment. Okay, we move through. Okay. Right? We're doing it. It's not a deal, right? It's not a big deal. Push through consequent encroachment, and then now we are back below consequent encroachment. 13 seconds left in the 1 minute. There are 10 minutes left in the 15-minute candle. There's 8 seconds left in this 5. So once we pass this point, then there are going to be quite a way to go in this 15-minute candle, and we'll need to see how it decides to perform from this point. hmm And we could either be bullish or we could be bullish. We could either be bullish or bearish. Wow. Wow. Lesson number one. And on the 1 minute chart, I was watching as price appears to be failing. That looks like a failing price to me. Is that every time we come up here, we reject it. We reject it. We reject it. We reject it. Now we've dropped back into this imbalance. On the higher time frame, on the 18-minute chart. Whoa. On the 15-minute chart, it's making a run right back to the opening of the current candle that we're sitting in. Right here is the opening, the current candle we're sitting in. This is the closing price of the current candle we're sitting in. We run down, we drop down, we pop up, click. And I said click because I'm not doing enough measurement right now, right? I'm not chasing down that best entry right now. Oh. Mm. I'm not chasing down the best entry right now. I mean, and I hope you guys can notice that in your sales when you're trading. And some days you say, man, I approach the market like an animal. I'm measuring out order blocks, right? This wick respected this candle. This wick is in the body of this candle. I'm gonna take this imbalance from yesterday and pull it back. And then, as a matter of fact, yes, I'll pull it back and just hold it arrears. And watch how I do this. I'm gonna take my time. The trade is still in progress, but I don't want to run headlong, negative order block. Oh yeah, that's bright red. And then I'm gonna send that to the back on the visual order. Send to back. Okay, okay. On the 15-minute chart, we ran up to the mean threshold of this candle. Mm-hmm. From high to low of this up close candle. Mean threshold, we drop down to close. We have approached mean threshold of this candle again, and now we're in the discount. We haven't violated it, but we're in the discount low of this range. But we have not violated the area just above it. So I don't see the confirmation that I would probably be looking for. Even if we look at this candle and we pull this candle forward, we're roughly at consequent encroachment. Now, do I want to trade a consequent encroachment trade at this point? What do you mean want? And what kind of question is want, right? Either it is the trade or it's not, right? It's not, it has little to do with what we want because it takes a considerable amount of time to get to the point where we're taking these trades. See this move down and then the move up that respected this candle. If this candle is in this close proximity, we might be looking at this as the candle that we want to see respected because we never left its orbit. How about that, right? Well, Grady, what if price is just moving to the upside and it's going to move upside uncontrollably? Then I'm going to miss the trade. I'm going to miss the trade. I have not addressed or adjusted my bias from yesterday. We just hit the hourly candle high. Sorry, that's kind of what we were looking for. We just swept it just a little bit inside of this little imbalance right here. There's a lot on the screen, but I've measured this up close candle, pulled it forward. There's mean threshold on this 5 minute candle. On the 5 minute, we have closed much higher than that. However, this candle is normally pricing to this one. Now we've dropped back below mean threshold. We're back to mean threshold. Well, Grady, you're only going to have a few more seconds here before price begins to truly deliver to the downside. Are we going to take this risk, this trade right here, and put our stop loss up there? Well, price action is going to dictate to us in advance what's going to happen. Price is moving down away from this area. This is probably the best entry off this high. And I let it move away. 4 minutes and 32 seconds left in this 5 minute candle. 30 seconds left in this 1 minute. There's 5 minutes left in this 15 minute candle. And I think that's the issue that I have. I would prefer this 15 minute candle to close. I would prefer this 5 minute candle to close. This could be the entry, right? So we could begin to descend in this hourly candle to the downside prior to the open of the next hourly candle. Now, if I get involved prior to the opening of the next hourly candle, then I will not be protected because I won't have the benefit of having market structure and PD arrays to validate and regulate where price delivers to, right? I'll be skydiving without a parachute. I won't know where to put my stop loss, and I will not understand or believe or see where price could be retrading to because we haven't taken the um actually we did touch the prior opening price of the prior candle. This is really a juicy trade for me. And it's low risk, and I would hate to go into the weekend with small drawdown on my account. I'm going to get into this trade, possibly off sides, right? Earlier than I would like to. There's a lot of time left in this 5 minute candle. We've run this high. This wick addressed this up close candle. We were dealing with this the body of this candle. It's apparently there's a gap here that we can pull forward. Once we've measured it out, now we're below consequent encroachment or mean threshold of the body of this candle. There's several confluences in place. The time of day, the idea that this 15 minute candle and the 5 could very well begin to descend at this point. We've already taken the hourly high. We've run the 2 hour high. We've taken the prior up close 15 minute high once. We have a retracement to the highs of these levels as we've made a consolidation at this particular point. I don't have again, like I said, I don't have a lot um of I'm not like I don't have a crystal ball on this one right here. I don't have a crystal ball. It's just that we've taken enough of the levels that I wanted to see traded to in sequence that my entry is the my entry is the statement about what I'm thinking about this particular trade right now, if that makes any sense. There's nothing really, of philosophical or nothing really, I have nothing prophetic to say. I think the most prophetic thing I could say as I look at these levels and I put put on this entry, that's what this is what I'm thinking right now. And in the last minute of this 5 minute candle, there are a lot of levels here that I'm going to begin to remove because I want to see clearly what we're doing. We just popped up to this line. That was the 1 hour close that I wanted to see traded to. We traded to that level. We are coming into the close of this current hour, and this current hour is hourly candle is forming, right? So the close, this is the 15 minute close, 35 seconds left in this 15 minute candle. The last 10 seconds of the 5 minute candle are going to show us a thing or two. It is 10 a.m. and this is where we are. If that makes any sense. This is where we are at 10 a.m. Um, Not quite the silver bullet trade that I was thinking I was going to see. We have just a slight bit of displacement toward the end of that candle. Let's see if we reject and turn and run the other way. We have to be careful because it could do it very, very quickly. 10 a.m. I believe we have news come out just now. It was the Michigan consumer sentiment numbers. We were looking for 54.4 and it came in at 50.8. I lost sight of that. I lost sight of that. Um, this looks like we could see a rejection depending on how the news interacts with this the news interacts with this number. It could change direction on us right now, depending on how news interacts with this number. Ten a.m. and we move down from our entry. We pull the entry down just a little bit to the high of this. I'm not going to move my entry. I think I did, but I didn't want to. We swept the high of the prior hour. Now we have the wick of this current of the prior hour to deal with. What I mean by that is if I pull up the 1 hour chart, this is the wick of the prior hour. This is the prior hour we just closed. We ran up here in the opening of this hour. Now we've moved down the body of this hour just a little bit. And I said the word hour at least 15 times here. Coming to the closing price of this down close hourly candle, watching for a reaction here. We want to go down through all of this level because we would like to see no resistance or low resistance liquidity run from this point forward. That from this point forward, we would be moving down through everything London had already established, right? Every London had already established these levels, and that's where we would want to see price go down to. So now we saw this multiple times yesterday, where price displaces this many ticks, right? And then we're looking at $200 in profit easily. Um, According to Top Step, that's enough, right? 200 a day, right? This is the second news event of the day. We're gonna hold tight. That relative equal low level, we rejected that level multiple times. We rejected it. We never rejected it. We traded to it and below it here. We traded to it and below it here. Now, this is that pre-market imbalance that we dealt with at the beginning of the day. It's from the pre-market. We traded down into it. Did we invert this area? That's the question, right? Are we going to invert it? Are we going to trade down into it, trade low into it, trade back to the middle of it, and then begin to rise? Because taking $300 right now and calling it a weekend is not a problem for me. That's not a problem for me. I put in a protective stop loss here, so I'm not really at risk of losing much. Probably just break even for the day. And I don't really want to trade a lot today. I want to keep my trades as minimal as possible. There are 30 seconds left in this 5 minute candle. 30 seconds left in this 5 minute candle. I'm a little I am a little early with my stop adjustment here, right? I am early with my stop adjustment. If it were here, then I'd be golden, right? If it were here, I'd be golden. We would deliver here, we put in an up close candle, and then the next move up would be here. We have 2 seconds left in the five, and then we opened up there. What we want to see on the 1 minute chart now is just a move below this up close candle to the downside. A retracement here will probably come back and stop us out. But the problem would be is what? It would mean that I was looking at the shorter leg of the day and not the longer leg of the day. And what I was looking for was the longer leg, not the pullback or the retracement. I was really looking for the the trade that was going to continue for the longest duration of time throughout the day, which is a little bit. It's a day trade, but it's not quite a scalp, right? Making my exit right here would be a scalp, a decent one. If somebody walked up to you on the street and handed you $200, you would not be upset. You would say, "Oh, thank you," you know? You'd be like, "Great." Here's my trading struggles of my life right here. These are my trading struggles. This 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 price representation are my trading struggles. There's an imbalance on the 15-minute chart I see here. There's 8 minutes left. I'll pull this area back. And there's kind of this imbalance on the 15. I am watching this, so I don't want to move anything. But we traded down into this level, and waiting for maturity. Waiting for maturity. Come on, go ahead, mature for us. Fruit is not. The fruit is not ripe. If it's when it ripens, it'll be ready to be picked. And we are right back where we came from. That's okay. That's okay. But I was looking at this 15-minute imbalance, and we just wicked right down into it, and we turned around. So here's the high of the 15-minute candle, the one that we just created. Did not want to see us go above that very much. It would be nice to just run that 15-minute high and then go ahead and deliver to the downside. Obviously, because I've made my entry. But I adjusted too soon, and I was taken out of that trade. Mhm. All right. How was the market reacting to this news? How are we reacting to this news? What does that mean? Hmm. What do we think? PM session trade? Hmm? PM session? that 5 second chart, this 5 second chart, that looks lovely. See how we made this level up and then we just Yep. Mm. 1 minute left in the five. We just traded right back to the high of that 5 minute candle. Oh, buddy. We close here, wick to the high of the 1 minute, trade it right back up. Let's see if this keeps going. We stop here, just shy of the high of this up close candle. The time is 10:19. Mm, mm. Okay. Okay. 10 seconds left. 10 seconds left in the five. Yes, I did want to take another shot at the short right here. Just that swing high, pop right back in. So the first thought is sell it again. Stop loss in the same place. But that again puts me at risk of over trading. And if it didn't work the first time and we just dropped down and then we ran right back up to the high of the 5 minute candle, then am I just chasing the price or what? Now I do believe it is very important that our entries are on these extremes, not in the middle of the run, but at the high end or the low end of the range that we're in. And I'm glad I said that because I'm not quite sure what range we're in. Mm, 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 mm. We'd have to be in this range, right? Nothing really breaks out of it. So we move down here to here. This range from here to here is inside of that range. This range from here to here is roughly inside of this range. So move here to here, and to there to there, here, there, down. See prices moving down now. Yep, that was the entry that we discussed. Yep. I need a candle that's moving up to get short. If it's moving up, good. If not, we have to let's let it fall. But I'm glad we did take the time to step away and look at the higher time frame to get some clarity. Yeah, but you missed a trade. Yes. Yes, I did. Without the measurement and without the logic, then I can't even remember or I don't have any data to say that trade was wrong because your stop loss was too tight. Right spot, stop loss too tight. Right spot too early, right? You got in before price had an opportunity to really get, to get settled, to really cook properly, right? That's data that we can use. If I start just hitting spamming oh, look at this. If I just start spamming the sell button, spamming the sell button, spamming the sell button, you'd be extremely surprised when price finally decides to deliver and you can't, you can't get involved, right? Because you've already maxed out your mental capital, you maxed out your because holding the trade is the hardest part, right? Holding the trade is the hardest part. Stop loss. Stop. TP. Beep, 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 beep. What's wrong here? Order price is inappropriate for the. All right, let's try that again. I guess I won't be able to. I wanted to put an order on and have it run to my entry. The proper way with a pre-planned stop loss, with a pre-planned um, take profit, and then TradingView decided that it wanted to um, make me feel bad. That made me feel bad. I couldn't pass up this trade. It's probably I probably should get out of it because we did not close below this prior level. However, it was just we were at the level that I wanted to get short. There was an imbalance. We traded into that imbalance. What else could I do? What else could I do? It's 10:15. Silver bullet. I mean, what else could I do? I'm at the end of the 5 minute candle. It's terrible. Last 10 seconds is either going to validate our entry or break our hearts. That's it for that 5 minute candle. We pump, we pump. This is the beginning of the next 5 minute candle. We pump, we pump. Are we making bad decisions or good decisions? 10:15 a.m. New 5 minute candle. Are we forming a tail or are we forming a wick? Let's go. Whoa. Early in that 5 minute candle. See, if it uses this level to move higher, then I am going to fall out of my chair. I'm not gonna fall out of my chair, y'all. I will want to. If we don't move directly past this level and continue, then I should go ahead and exit the trade now. If we don't just keep going. It seems superstitious. However, if price returns to your entry and touches your entry exactly, it's a very odd, it's a very odd probability that it's going to use your entry to move higher. And right now it's showing this reluctance to move lower. So the wick of this candle went to the high of this 5 minute candle. Should I cut it? Should I cut it or should I hold it? I mean, because I don't need drawdown. I don't need drawdown. I like the way we did this, and I like the way that we turned over and we've come back down. There are a lot of things about this to like. My entry was extremely low in the gap. In this gap, I looked between this up close candle and this candle. This up close, not between this candle and that candle. That was a misread visually. Can't trust this 5 minute candle. It's just one of those things because we appear to be in a consolidation, and I can accept that. We appear to be in a consolidation. We moved below the low of that previous hourly candle again, but with almost no desire to stay there, right? So moving below the low of this hourly candle and staying here is very important. That's very important. In 19 a.m., we've had some movement to the downside, but we have these down close candles that are giving us a little bit of resistance to deal with. 20 seconds left in the 5 minute candle. Believe me, the last 10 seconds of this 5 minute candle and rip our faces off if we're not careful. Pulling my stop loss down, minimizing the risk that we have on. We're approaching the relative equal highs again. This small imbalance that we formed early, pre-market gap, move through that. Will we break the range, right? Will we come down and break the range and head in any particular direction? 39 minutes left in the hour. We are 20 minutes into the new 4-hour candle. The low of the prior down close candle is 18,365.75, and we have tested this level. This is the third test of this level. We have two 4-hour candles that have changed direction. Well, actually, we have one down close candle that closes here, up close candle that starts here, two down close candles that reject here, and now here's the third candle that has come into the same range. And we've taken liquidity out below this level. We've just hit sell side here. So this sell side is taken. And then we have sell side here at the low of London. We have 1 minute and 13 seconds left in this particular candle. In the 15-minute candle, we have 8 minutes in the 15-minute candle. Now, again, this has been an area that where we've rejected price multiple times. It's kind of a consolidation range, right? So we've been up and down and up and down and up and down. So now we will need to see whether or not we move toward 18,041.25. 18,000. Zero. Yeah, right. Will we get to this area? 18,041.25. That's a nice dinner right there. I could take my wife out to a nice dinner, take my family out. All of us eat lavishly right there. Oh my goodness. Could be Free Fall Friday, where we will normally this is the completion of a Free Fall Friday because I'm rough, 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 a Free Fall Friday. And this is the way I like to go into a Friday. This is the way I like to go into Fridays. Just like this. Okay, now on the Fibonacci range, we talked about this yesterday. I want to revisit this today. My personal edification. Let's see if price is rejecting here. So we hit 100%, or we created the 100% range. We dropped down to 87%. Then we popped up. Once we removed below that, we ran to the 79% of the fib, and then we moved back to 87. Then we moved down through 79, consolidated around here yesterday at the 70 mark, moved down, came back to the 70 mark, moved below 62, back to 79, back to 70. Now we're doing this. What I would like to see here is straight line. Don't want to see that. I know understand what it means for most people, but a straight line at this point would lock in a lot of the profits that I would like to see at this point. Now, because we've run out the liquidity below London, maybe I need to go ahead and lock in the $400, $375. What do we think? Again, the anxiety of holding is is difficult, right? The anxiety of holding is difficult. Do I want to see the money taken out of my hand? Right? Do I want to see the money taken out of my hand before I've had a chance to grab it? Or do I wait for more? These relative equal lows are right at the same area as this relative equal high. Let's not mistake that. $300, $300 going once, $300 going twice, $300 going three times. The time of day suggests that I probably should not continue to look for back and forth price action, but directional price action. We've come into 10:30. Now, at 10 a.m., we were here. We traded up here. We created this imbalance. We traded into this imbalance just a little bit after 10. What I want to believe is I want to believe that that's the 10 a.m. silver bullet. Is it? What do you mean, Grady? Is it? Let me see. If there's a gap right back here and we displace and we run down to that imbalance, sometimes this could be our silver bullet, right? That gap right here, this imbalance right here could be the area that we were running to in order to set up the price move of the day. I hate that about price action, but it's just one of those things that as you see it enough, then you'll say, doggone it, he was right. It ran all the way down there to some imbalance from the previous day. And when it does this, to me, it's always important to stop and then look back to say, oh, yep, there it is. As what's the meme? What's the meme with um 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 Leonardo DiCaprio? Right there. There it is. Yep, exactly. Be careful. Be careful of the imbalances. We've moved below the daily range of that let's take a quick look here. Let's take a quick look. And I'm taking a look at here. So we ran from this week's new week opening gap to the prior new week opening gap. In the middle of this process, we established these daily gaps. We are currently in the range between the um the low between the low of this new week opening gap and the high of this new week opening gap. If you took a quarter level, then you would see here that we are below 50% of that total range, which means that the wick of this current daily candle is in the premium and the current price action is in the discount of the range between these two weekly gaps. Go when you look at your current weekly gaps, then you'll often see that when we leave a weekly gap, or we'll trade between the weekly gaps, creating the daily gaps that make the intermediate stops along the way. When we're making the intermediate stops, they're going to be roughly quarter stops, right? There's going to be 25% of the range, 50% of the range, 75% of the range, or 100% of the range. Or sometimes it'll go as ICT would say, to and through. It'll go directly to that level and then run through that level. So here we're on the 15-minute chart. We'll see that the daily gaps, as again, we're below 50% of the range from the low of the higher new week opening gap and the high of the lower new week opening gap. And prices kind of took out this liquidity here, took the liquidity here. We are processing through these ranges. We'll have to keep an eye on this level right here at 18,245.25. We need to keep an eye on this range. Boom, 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 bam. Then we'll need to keep an eye on that range. Now we'll jump right back. Now there was a down close candle here, and I believe there was a gap inside of that down close candle. And this is where our price kind of slowed down for us at. But this wasn't my point. My point was we went above this new week opening. I'm sorry, this daily gap. We created this imbalance on one side and the other side. Then we dropped down through it. We traded up into that area. Boom. Was that Venom? Then I think this is the injection. This is the venom injection because it's like the two fangs venom injection. And then we move to the downside. Then we trade up right back to the same imbalance. We can trade through it, close here, wick here, open there, touch there, then drop down. Then today is way over here. All of this is in the pre-market as we're operating back and forth between these daily gaps. We traded up here roughly 75%, roughly 50%, roughly 25%, 100% of the gap between the two daily gaps, and then we deliver to the downside. Now, that was an excellent distraction for myself to so allow me to be able to sit through all of the back and forth of price action here because it's again, it's stressful and strenuous sometimes to watch it price back and forth. And I know as far as my recordings are concerned, it would be better if I didn't do anything and just recorded the entire thing. But once we move back to this high or above this level, then my neck tightens just a little bit. It tightens just a little bit. Yeah, it does. Yes, it does. It tightens just a little bit. Like, are you paying attention or did you fall asleep? Right? And I think that's truly the message that I'm sending myself. Am I paying attention or did I fall asleep? Right? Because I can fall asleep and then I'll start doing. Come on, come on, baby, come on, baby, don't hit my stop loss. And then when I do stuff like that, if I'm in that mentality, wouldn't it make more sense for me to begin to move my stop loss down? Why? Well, if you don't hold the entire move, then you're cutting your winners short. Right. Also, if you don't hit the sell button right here, you're not adding to your winners, right? Mm, mm, mm. And then we said a lot of stuff. But then this looks like a very slow, sluggish consolidation. And if that's the case, then I don't want to be in a consolidation. There's too much there's too much back and forth on the higher time frame when price finally decides that it wants to deliver, then the next candle will open up and shoot back up to 18,560. It'll shoot back into this area to hit the high of this up close candle one more time, and then it'll decide to deliver to the low. I don't really want to go through it. It's a good Friday. It's a good Friday. And look, your psychology will dictate how you endure price action. If you have negative thoughts or if you have scar tissue, and I like to use these terminologies because anybody who's watched the mentorships, either 2022, 2016, 2017, 2023, 2024, any of the mentorships, you've heard or listened to any of um, um, the Twitter spaces, then you've heard of scar tissue, right? You know what is meant by scar tissue. That scar tissue is as you trade and as you develop your experience of trading, there are certain things that you have done in price and price action that you say to yourself, "Dang it, I wish I'd never done that." But then every time you get ready to make a trade or take a trade, then that pops up, right? That's the thing that pops up every time. Oh, I believe price is going to turn around and run back on me. Now, for me, what does it cause me to do? It's caused me to move my stop loss down to meet price as it's rising. Why is that bad? Why is that bad? Right? There are multiple things I could have done. I could have trailed my stop loss all the way down right behind price, and as soon as it pulled back this first time, I got out. Or when we ran down below this level, I could have went ahead and cut the trade and got out. But why is it bad that I would move my stop loss down to meet price? Well, the problem is that um let me be diplomatic when I say this. The problem is that I am trading emotionally and not technically. See? The problem is that scar tissue is those emotional markers that when we start beating ourselves up. Now, if we're the type of people that beat ourselves up, then we're going to have more scar tissue than other people. But if we're the type of people who say, look, the truth of the matter is I took a nice pool of liquidity on this run. The truth of the matter is a nice, I took London session low. Now, I'm holding for the dream. And the dream is that price will begin to spool to the downside. Or we will break out of this range and price will begin to deliver. But we've had so much volatility back and forth, the odds of us doing that have become lower and lower. Odds of us just going ahead and moving to the downside are lower and lower. Now price is coming back against me. They're taking the money out my palm. They said, buddy, we gave you a chance to take the money. We gave you a chance to take the money, but you didn't want to take the money. You wanted to get greedy, son. You wanted to get greedy, son. Because you wanted to get greedy, we're gonna go ahead and we're gonna take the money out your hands, buddy. You wanted to get greedy. And then now we're watching as price comes back more and more and more. When we hit this imbalance, when we hit this small imbalance, I was looking for a price to kind of curl over. Yeah, I think we put in a nice little high right here. Then we ran this high into this imbalance. Then I wanted to see price roll over and then start moving down below this level, like a higher time frames fooling. We go to the 2 minute chart, then we'll see that yes, there is an imbalance right here. But we would want to see us move above this current high, move above this gap, that ain't gap, and then and then begin to slowly move down to the downside. On the 5 minute chart, we are looking at this and this. Mm. 2 minutes and 54 seconds left in the 5 minute candle. I'm not at risk of losing anything. In any case, we would probably end up not too bad. Not a great green day. Not too bad though. So I'm gonna give this trade some room to breathe. We're not gonna end up too bad today. And I think the thing that we probably should do is enjoy our weekend. And I hope you enjoy your weekend. Great golf, great tennis, or whatever makes you happy. And let me tell you, um, we're here to make funds, not have fun. But I think that those two things are sometimes synonymous. Um, but yeah, enjoy your weekend. Um, and I'm just watching price out the corner of my eye. I really didn't have anything to say. I just kind of wanted to take my eyes off the chart for a second because if I look at it too long, then I'm gonna start to think things. I have a stop loss in place, and I want the stop loss to do its job. I have a take profit in place, and I really want it to do its job. Um, however, if I look at the price and I look at the numbers, then I know I'm going to become emotionally involved with the outcome. But this is the process, right? This is the process. If price just drops down to take out the liquidity below these levels and then pops up to run higher, that's just what it does. If price is but just going to begin to slide to the downside, and now we've just retraced back to this 5 minute fair value gap, then that's what it does, right? That's what it's gonna do. And I can't do anything about that to change what's going to happen. The only thing I can do is put my stop loss in place, um, and let price mature. That's the only thing we can do is put our stop losses in place and let's let price mature. But it seems as if we're going to run directly to my stop loss, and I'm tempted to move it higher just to my entry price, but I'm not going to. I'm not going to. We're on a 5 minute chart. There are 30 seconds left in this 5 minute chart. The last 10 seconds are going to really help us out here. Whoa, 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 whoa. The best part about today is what? The best part about our trading day today is the way that we decided to get into these entries. We stopped when we started having tunnel vision on the lower time frame. We stopped. We pulled back. We took a look to see what was available to us, and then we got involved. Um, Looking at the higher time frame charts, there's nothing but wicks, long wicks. And that's something that I've noticed about this. That's characteristics of this entire week is that we have so many of these long wicks on the upper extremity. We have a lot of these long wicks on the upper extremities of bodies of candles. So once we finally broke down below this level and we traded back into this range, man, I really didn't want to. I don't really don't want to see us come back up here. But that's kind of the deal, right? We have a lot of overlapping price action right now, and just because it's a long range price action, and it's a consolidation, it doesn't really change. Um, it changes the way that we can kind of perceive price. Instead of expecting to have these longer ranges of delivery, if we're in a consolidation, then we're going to move between this high and this low, right? Or, between this high and this low, back and forth. And it's odd to see on a Friday, but it happens. Mm, 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 mm. Shooby doo dee doo. There are 3 minutes left in this 15-minute candle. I moved to the higher time frame because I just wanted to see where we were in the overall range in relationship to where my stop loss is. Now that we are here, I see how the 15-minute candle is just like doing its pumping. It's like pumping. It's like pumping, right? It's not going anywhere as much as it's vacillating back and forth between uh 18,440 and 18,004. Oh, okay. Now that I'm running my mouth, it wants to really show me what we're doing here. Sacagawea coin. 2 minutes and 23 seconds left on the five here. Strong impulse to the upside. I don't want to take another trade. And it's not that I'm being lazy. It's just that the volume of trading is not good. Yep. The high volumes of trading isn't good. So I don't really want to take another trade. Um, it's just the thought of it is like, no, I don't want to do that. We did okay today to get involved in these two trades. We wanted to hold it for the duration of a nice extended move. Um, we called everybody, texted everybody. We knocked on the door, but we weren't invited to the party. So that's what it looks like. It looks like we weren't invited to the party. We had a decent delivery using a different instrument, then you know we could probably satisfy a greed based itch. But using this particular instrument, this is going to be process based. Definitely, this is definitely process based. This is process based. And the sad part is, and some people would see this as a loss. Some people would see this as a loss, right? Like, oh yeah, you could have had, but you only had, like, yeah, I mean, yeah, yeah, I mean, yeah, you're right. And here it comes. Oh man. No, no. Everybody together. No, no. No. Everybody together. And the funny part is, this is exactly how we started this trade, right? We started this trade where it came extremely close to my stop loss. And then, well, not this time. Okay, that's it for the day. I'm going into the weekend feeling pretty good. And the thing that I feel is, we what did I say? What did I say about this gap? Huh? What did I say about this gap? You take that gap from several days ago and you pull it all the way across. What do we say about that gap? Could that gap serve to send price higher? He says, I don't know. Once we break market structure at this point, once we broke market structure, once we broke market structure, I guess here, we closed above that candle just a little bit. If we didn't move down below this candle at this point into this imbalance, I should have exited. I'm thinking about it in hindsight, right? But I'm thinking about it in hindsight because in future sight, that's exactly the way I want to trade it, right? I just want to go ahead and take the 400, call it, call it, right? Because basically the thought process is and the reality of our situation is we're basically doing small account growth. It's not this idea that we're going to get in and we're going to make a lot of money very quickly. Um, but we're really doing small account growth. So $400 was more than enough. According to Top Step, if I make more than 200, then I'm qualified for the payout, right? So yeah, that's what we're doing. But what I know, what I know I can't do personally, I know that I can't. We just traded to the low of that 15-minute candle just now. The high of this candle is the opening price of the previous 15-minute candle. Come on, Grady, don't do it. Don't do it, man. Don't do it. Don't take that trade. Don't take that trade. Oh man. Every gambler knows that the secret to surviving is knowing what to throw away and knowing what to keep. 'Cause every hand's a winner and every hand's a loser. All right, let's go ahead and exit here for today. All right, thank you guys for sticking around with me, checking out some of these videos. Please like and subscribe, comment, hit the bell notification, and we'll see you on Monday on the charts. I'm working on that. I'm working on that. I'm working on that. Have a good weekend.